Hmm. Why isn't this working? Shit. Um, okay. So you hold on. I have to mute myself for a minute.
Okay,
All right.
go ahead.
So, I mean, you preface it and gave it an abstract overview, but when you look, I mean, the metals and were already, um, as you I think very rightly point out, were correcting this morning. They started last night. I couldn't get the silver sold, unfortunately, at a level that I wanted to. That's what I should preface it. But the the damage you see being done, because you got to look at the bond markets today, and they really started yesterday. So they've been bond yields on the longer end have been going higher. You've got big auctions this week, so that was in anticipation of the supply hitting the market. And that Mnuchin last week had talked, and not only talked about, but they're going to be moving further down the curve in the amount of supply the Treasury is bringing to the market, which is going to force the Fed into some type of yield curve control at some point. Well, today's action, was compiled with the PPI numbers, which to me, the data is, to my mind, is meaningless, but not to the markets, and the market always prevail over whatever I think. So they were looking for core PPI at 1/10 of a percent. They got 0.5, a significant miss. The headline was um, less important. But in viewing this, see, this is where the algos run front and center into, to me, the headwinds of the underlying fundamentals. The algos go, well, rates are going higher. How do we see it? We see it in the long end of the curve. From my perspective, all the curve is doing is steepening, which is something that the Fed and Treasury really don't want, because they've been talking quite a bit about it, but it doesn't matter. It's with the amount of supply and then some increased inflation. So you have people who may have been long bonds selling out here. I don't know that it's more than that, but you are doing some technical damage from everything I look at, from the tens, the tens not so much, but the 30s certainly, as these curves do begin to steepen. It'll be interesting to see where they stop, but the curves should be steepening because real yields, and again, I stress the term real yields, not nominal yields, real yields, and they're critical here because when you get higher inflation and the Fed's not moving, then real yields become ever more negative, which is why I want to watch the dollar. Because as you can see, you're getting, the gold is also under some pressure, and was, I think, all night, because the currencies were, not the yen. The yen is the risk off. So why they're playing that game, I don't know, but it just keeps me on notice as to how this whole board sets up. But when I looked at, the euro was strong this morning, and it's not like the news out of Europe was, outstanding. It's was good, but some people are waking up to the fact. You saw the equity market, of course, the DAX did more than catch up overnight. So how the dollar reacts here, because this inflation data, bond rates going higher, is bad for the dollar, unless you think that the Fed is going to curtail all its aggressive action and raise rates. If you think that, then gold will probably go back to the 1480 to 1530 area in my, because that would absolutely have to reverse the entire mindset of where the market has been and gone. So do I think that's going to happen? I don't. but I will be attentive to what they have to say. But that's how the algos do read this. They react to it first and foremost, and they find the correlative trades, and you're seeing the correlative trades. So that's why I want to see if the dollar can get can can have sustained weakness here, because in my fundamental viewpoint, it should, because again, real yields in the U.S. have moved more negative today, even as bond rates have moved up. I'm looking at the short end of the curve because I think that's much more important for interest rates. Even though, as I talked about, when the Bund and U.S. rates compress, it does seem to put downward pressure on the dollar. But my big fundamental, and it's big, again, this is over a much longer horizon, and it has been the driving viewpoint of why I've been bullish to metals for as long as I have. But this one solidifies the situation where yields in the U.S. are ever more negative. So it's, I just wanted to extend some of what Judd was saying, but it's something I will be watching. And I think the dollar, for that reason, bears scrutiny.
Yeah, and you know, you look, this conversation that we're having earlier today is, when are these commodity patterns real? You know, you have an ORL in gold, copper yesterday, big
Yep.
follow through today.
Yep.
You had an ORL on Thursday or last Friday in the gold on unemployment. Now you've finally gotten the follow through on that. Is that the you know, we've seen this in the indices where you have to give it a day or two to see if the pattern's real, because all these patterns are broken with quantitative easing.
Absolutely, Judd. And here, I'm going to tell you what, we had actually two good indicators over the last couple of days, because I have gotten copious amounts of emails that the miners really weaker in the face of stronger underlying metal. Now, that is a very good test, by the way, because it seems that a lot of people who have come late to the metals are playing it in the mining sector. So you've seen profit taking there, which is really interesting, that they are now leading on the liquidation. So, you know, it's like you put up, if you, Barrick, which is now GOLD, had really good earnings, and the performance over the last, you know, has been not very good in the face of all that. So, but that's a good, that develops out to a good indicator for me, because it shows me where the masses are playing. And it seems that more people want to be involved in the mining sector. So you started to see some weakening ahead of that. Now, the other side of that coin is, as the steepened a little bit yesterday, it was hard to believe, I'm watching it, how the bank stocks rallied on a very minuscule move. But there they go. And look at them today in the face of a steeper curve.
Yeah, and they bottomed on Friday with all of them put in ORH days. Goldman, a lot of them did, and they followed through. I mean, a bunch of guys on the room got in a pen, and everybody got in on Citibank yesterday. I mean,
where?
They bought Citibank calls.
Oh. Yeah.
And I hate Citibank, but they made a lot of money on them.
I passionately detest Citibank. In fact, if I was Elizabeth Warren and I was looking for some relief on Volcker rules, here would be my, this would be my criterion. We will ease up on Volcker rules when Citibank makes a new all-time high. That's how much I hate Citibank. Go ahead, put up that friggin' chart. And I say, okay, I'll roll back Volcker when Citibank makes all-time highs.
Well, I haven't traded Citibank in a couple of years because the last time I traded it was I bought it around 60. And on that swing, I think in 2017 or 18, it should have gone to like 140.
Yeah.
Based on what all the other banks were doing.
Yeah. So you get my point. So let's see, the all-time high is what, $560 or something?
Hey, Ira, I think it's Penn here. At the end of the day, it's just that financial engineering horseshit that they do.
Penn, you're 100% right. That's really what I'm calling out. But you know what? The banking industry will have regained its full health. I mean, why doesn't Citibank, we know JP Morgan made all-time highs. I don't know if they did in the last, run up prior to the correction. Wells Fargo certainly didn't, Bank of America. So, but my barometer would be, okay, if all things are good, Citibank, which is a monstrous size, when it makes all-time highs, okay, you think that's a little bit rough? Okay. Or let's have it fill the gap at about 410 left at days. This is, of course, after it did 404, 419. You get it above 419 and I would ease up. And that's not harsh. That's, you know what? Again, I'm a big proponent of reinstating Glass-Steagall in its entirety and getting rid of Dodd-Frank because, again, garbage. And if it wasn't garbage, the two key names on that, Chris Dodd and Barney Frank, both retired from Congress after its passage. So I'll rest my case there. And first of all, the whole act was drawn up in the offices of Sullivan and Cromwell. I'll rest there. Come on, it was lobbied to death, and now they're trying to. That would be my criterion. Get up to that level. Yeah, okay, then I know the banking industry is healthy. But as judges, you rightly point out, look at how miserable that rally is. The performance is relative to other banks, especially, just miserable.
Yeah, and you can trade it.
Yeah, you could absolutely trade it. I'm just making it. That's a policy call. That's not a trading call. That's pure policy.
So Penn, I just put up this Goldman chart from here up to 218. Just manage it.
Yeah, no. Hello, former Goldman girl here.
Yeah, I know.
I get it.
I'm just pointing out we're at the bottom of the cloud and the 200 week is up there at 218.
APL.
Got it.
197.
By the way, some guy almost bought 1 billion shares of Apple just now, 886 million. Okay, if that doesn't take your breath away.
Wait a minute. Somebody bought 808. No, they didn't.
886 million of the
Dollars worth? Dollars worth?
Dollars worth. Yep.
Oh, must be the Swiss National Bank.
Yeah, they bought almost 2 million shares at 400. Well, this actually, you know something? Well, at $448. So that could be, did we go to 448? Yeah, we did. Okay, so it's kind of late reporting. But yeah, that's an institution. I mean, that is big stuff. And Ira, to your point, usually when they do this in dark pools over at Flow Algo, when they report that and they report it late like that, it's probably Europe, in fact.
Oh, okay. Well,
I mean, it's just, that's for what it's worth, contextually.
no, but it wouldn't have surprised me if it was Swiss National Bank because you can see the way the Swiss is, trades this week. Yes, what they say? What they say Wednesday, Tuesday. I mean, yesterday morning, the Swiss was really weak. And then, of course, it turned around. So that told me that the Swiss National Bank was in. You know, you have to guess at it. It's not like I have, you know, I'm not a banker in the EBS system where I would be able to see it. So I have to just watch market action around it. But again, I'm really not doing much here. I'm being patient, but I want to see the way the dollar either if it weakens, if the dollar strengthens, fine. You know, that'll tell me that the algos really are in charge here in the short term. And if not, there are other forces going that, you know, who are into the real yield syndrome. So just watch, you know, these are days you just have to pay attention.
So let me give you a Rob's thing here that you didn't listen to. Uh, he basically called me up and gave me the rundown on the cattle, and he said that the correction was needed, and it was what the markets usually do. He said, but now the cattle has got to make a new high by the end of this week, or they're gonna blow it up again. And he said yesterday all the hedgers got filled on all their sales.
Oh, well, that's, yeah.
Yeah. So he said, because before he said the funds there was nothing for sale for the funds to buy.
Mm-hmm.
So now he said that some of the guys are actually, hedging their herds and starting to throw stuff out there for hedging. And he said that's what can drive it now.
Okay. Listen, you got to respect his opinion, but I will say, I know from talking to somebody else who watches this. This is a seasonally strong time, and I don't trade meats.
Right.
I really don't. I haven't in years, but it's a seasonally strong time to be long hogs and short cattle. Don't know why. This is not my bailiwick. It's just,
I have no clue. He just said you can be long the COW ETF until the fall, regardless of what the cattle does.
Okay, but again, as I sit here, I'm watching this dollar very carefully today. And, yesterday it honored its resistance areas pretty good. I know the last night we got up to 93.72 in the index. And we made a 93.17 low. So it's had a pretty good range. Well, let's see where this takes us.
Yeah, I don't like the high in the euro, and until it takes that out.
No, that's a good point. And, what is it? I have that sheet in front of me.
Yeah. And until it takes that out and closes over it, then it's just
13. Is that what I'm looking at?
Yeah, 118 and change there. Until it gets over that area, it's just range bound.
Yeah. No, listen, and when I see data like this, I think more and more that we're going to go to the 125 area. But it ain't going to be a straight shot.
No, and even in the cloud momentum line now comes in at that matrix level.
Yeah. And again, the yen crosses are putting ever more pressure on the yen itself. So, I mean, really, these.
Yeah, look at that. The euro yen's got a nice pattern. Let's see what.
Oh yeah. Oh yeah.
So is that where's pound yen? Pound yen's ripping. That's breaking out.
Very nice patterns. You look at Swiss yen. It's driving the Swiss crazy, but look at that. I mean, and that pattern is pretty powerful too. And the Swiss on its own, meaning just dollar Swiss, if I'm looking at the Swiss futures, I always go back to January 15th of 2015 because that's such a critical. So everything in that area, in that January, February pricing area, very interesting where we're at.
Yeah, well, even the Swiss yen off that 2015 area,
Yeah.
The pattern, last quarter's pattern with that ORH pattern, it's so powerful that it's coming out of here.
Yeah. Yeah. No question. So that's where I'm at with that. I really, you know what? My ag mining, look at, those are holding, he's trying, somebody, after they sold it off after really good earnings, somebody's come back and started looking at it. But these are plays because these stocks have been so unloved, and Penn could probably speak to it far more than I call her Penn out of respect. Otherwise, I'd call her Alexandra. But I get confused between Alexandras. This is the time when you will start to see some consolidation. Really, I'm truly surprised that nobody's put Freeport in play.
And it's down again today.
Yeah, you know what? But metals are getting crushed. So you always have to look at Freeport. Is it a copper or is it gold? You know why? Because it gets a little love from the gold crowd, but it's much more of the copper crowd, I think, that.
Yeah, and you got no RL, so you got the sell stops below 14.12.
Yeah, I mean,
So that's
again,
all it's done so far.
yeah, it opened up nicely, but the pressure on the metals and the fact that I have not turned on a television today. This room is my television. I have to tell you, I get more information, useful information through here. I don't have, but I'm sure they're relishing the gold being down $100. Sure.
Oh yeah, they gotta love it.
Yeah, that's, you know.
And I think it's just right into the correction zone where you want to buy it. But it might
And of course,
tomorrow.
They'll tie it to the 10 and 30-year yields being up. So, and that's not wrong. It's not wrong. But what's the 10-year is still probably only at 62. I mean, we've been a lot higher than that. So a lot of things that work here. But those are the things that I'm watching. Even the Canada's come off of it because Canada looked like it really wanted to go, but Canada keeps running into resistance. It's really kind of nice looking chart. I'm looking at weekly futures, so it knows that overhead. But if I go to the cash chart,
Yeah, it's coming up to the bottom of the cloud there. I can see that.
yeah, you look at clouds. That's I depend upon you for that. But at 131.70 is the 200 week.
Yeah,
That's pretty good. Even though the formation is, and it's, you know, it's really, I don't think, you know,
Yeah.
it's the general picture of commodities. I'm sure if you overlaid it with the with BCom, you'd see the pattern very similar.
Yeah, it's coming down into the cloud again on the weekly there too. The next, the next little bit there is going to be brutal.
Yeah. All right. I just so.
Yeah, and the big com's coming right up to the 50-day or 50 weeks. So yeah, so it's this.
Has Andrew been in this morning?
Yeah, he's in.
Oh, he is. Haven't heard from him.
Well,
good morning, sir.
Oh, hello, Cleaver. Hello, Cleaver Green. How are you?
Oh my God, Mr. Moon. I just sent Judd a chart, and that's just looking at the ratio between the Nasdaq and the S&P, which actually put a bottom in a few weeks ago on that key reversal. S&P beating the Nasdaq.
There it is, right there.
Pretty strong relationship with the US 10-year yield.
Is that the guy from Lake?
The US 10-year yield kicking higher in the last sort of few sessions and that, and it hurting tech more than S&P, which makes sense. The one thing I do have coming in next week is seasonally something that looks pretty bad for stocks relative to gold, interestingly. I can't see how that's going to play out at the minute, but I'm just not sure if these yields continue to kick, how much asset prices are going to like them anyway. But that's the sort of focus I have. I'm not really sure. I like you to sort of see how this thing settles down.
Well, do you like this spread bar, or do you want me to throw up the one you sent off of Bloomberg?
Well, all I said was basically the S&P. So the S&P and Nasdaq, as we know, a couple of weeks ago, started to outperform on that
Right
key
here.
reversal.
Yeah, July
And I
13th.
just played with the relationship or the overlay with the US 10-year yields. And there's no question that as the yields have come down, which makes sense, tech's outperformed. Now with the yields kicking a little bit, that's definitely driving that relationship and supporting that pattern that you've got up there. Now I've been waiting for the 19th of August to the 22nd of August, where I have some cyclical and cyclical work coming in where the gold puts in a very strong outperformance against stocks. Now, I'm not seeing that yet, and I haven't got the trade on yet, but I'm watching it and loving the fact that they've decided to throw gold down into that timeline. But we'll just see what plays out next week. I mean, the zone, the 1940, 1950 zone looks pretty nice, but I mean, if you look at the silver last week, it got to what 29 to 31, which effectively was the objective from that swing count that we had down on the lows, and it was running at a 75% vol, so it just was not sustainable. So a lot of this stuff makes sense in terms of it calming down. I see it as being a pullback, but I'm not going to get married to it if it continues to pull back, and I'm just want to see where these yields settle down. But that swing count on the silver chart, it is that on a daily chart, a weekly chart, it measured about $29-30, which we got. So I think that can come back to 24-25 without too much problems, without doing too much damage. Otherwise, I'm like you, I'm sort of watching this a little bit and setting up for next week.
All right. Well, the kids in the room are making money in their financials. Especially Goldman. All the guys took these calls yesterday. And Goldman and Citi. Yeah.
Judd, have a look at Visa.
Visa's breaking out on the weekly. And it's been wanting to go to this gap at just shy of 204 forever. You know, it tried to come up there and get close in June, and now it's trying to do it again. So that gap, basically, that's the S&P gap. That's that February breakdown in all asset classes. That's what the Russell was trying to come up and fill. The S&Ps are over it. So I think you just take every single instrument and trade it you know, off the, you know, it's the same technicals. You're just seeing it play out over different instruments here. Bosch Health. So they're buying calls in this, Cal? What are they buying? 18.5 strike. Okay. Oh, that's right at cloud resistance right there. 1851's a 50-day. Yeah, if that's good, it goes to it'll go to 20 again. Capital One, they must have handed out credit cards to all the looters at Nordstrom's over the weekend. Oh, nobody liked the levity on that joke or what? No? Okay, so I'll keep my jokes to myself. All right, and you can see the MasterCard, this is the exact same swing. You know, we came up here last week, right up to the gap and stopped, and now we're coming right back up here again. So this is the same, everything's trying to do these same swings. Okay, anybody else have anything they want to add?
I guess they really, you know, in the SPX, short term, these SPY guys want a little pullback, but the SPX guys who are bigger, know better, they really want that 34.25, 34.50 for what it's worth. So I guess if we get some sort of, you know, relief deal or whatever they call it, maybe we go there. I mean, we're close enough.
Yeah, and we just, and the cash SPY's got to keep above 332. They got to stay above the gap. That's it. They start getting back under it. They're gonna come back under here and go back into this retest down. So, all right. So what are we looking at here? PayPal. All right.
I'll tell you, I still don't like that